It's not going to last forever. That's coming from Bumia Shaolu of FBN Capital. Still on equities, during the week, the Vetiva bond ETF was listed in the market, and chief executive of that fund, Damilola Ajayi, explains how the instrument tracks the Nigerian S&P bond as well as its composition. Here's more what Damilola told me about the bonds trailing ETF after the listing ceremony that happened on the floor of the Nigerian Stock Exchange.
The important thing to look at is a concept called market access. And if you look at federal government long-dated instruments, i.e. 3-year, 5-year, 10-year, 20 years, those instruments are ordinarily not available or accessible to retail investors. Even when retail investors are able to buy the securities off the primary market, to be able to sell in the secondary market is often difficult because they don't trade in wholesale lots. And what you have in the market is the banks that trade, these bonds. So what the ETF is doing is to break down access to federal government instruments into lots that any individual can access. I don't know if you monitor trading today. The instrument closed at 130 naira. Imagine you buy just a unit of that. That's 130 naira to access federal government bonds. What are the yields you have in the federal government bond space? Between 15 and 16%. So, the value proposition becomes immediately clear. So it's not an issue of, just having a product for, having a product's sake. It's, the matter here is creating access, to asset classes that ordinarily retail investors would not have had, access to. And, if you look at Nigeria as a whole, savings and investments are critical to development of wealth, growth of wealth, generation of wealth. This product is a good product for people to use as long-term savings to generate annuity income.
When you talk about retail investors, this is a derivative. Are you targeting the HNIs alone, or you're also carrying the low-income earners alone?
Retail investors who ordinarily can't access bonds now have access to bonds. HNIs who are looking to diversify their portfolio or reduce the risk of their portfolios can invest in this, instrument because it gives them the broad spectrum of federal government, securities. Foreign investors who want to access the market and take advantage of the fact that we are in a high yield environment can come into this, product to access conveniently the yields that we have in federal government bond securities.
Talk us through the composition of this new instrument as well as your expectations from trading on it, because again, this is an environment where such a security is not well known.
My expectation is that as long as we continue to educate the markets, as long as we continue to focus on capacity building, as long as we continue to engage, the Nigerian population on the benefits of instruments like this, we will see, a very aggressive ramp up, in the product. The on-the-run benchmark FGN bonds, i.e. you have 3-year FGN bonds in there, 5-year FGN bonds, 10 years, 20 years. And it tracks an index called the S&P Nigeria Sovereign Bond Index. And what that index does is that it takes and consolidates all the federal government issuances, the benchmark issuances, into one portfolio. And the ETF invests in that portfolio and transmits that performance, to the investor.